So the big question is this: how do investors like us who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings and retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer. Hey guys, this is John. Welcome to the Stock Market Shares podcast. It's been a while. I'm really excited though. The markets have just been like absolutely phenomenal. It's just been so crazy, right? Because people that it's interesting because I talk to a lot of the investors I know, and what they say is that the people who knew this was happening, people who saw the inverted yield curves, people that saw unemployment, blah 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 blah, like those people's portfolios in the past week or so have essentially gone up by like a factor of 10 because you just buy like any puts ever. And then obviously people that didn't see this coming, it's a little bit more painful. You're down about 30%, which, that sucks. It kind of sucks. And this has been a cool week because there's this thing called a dead cat bounce, right? A lot of you guys know about it. It's one of my, it's a pretty, hard thing to trade usually, but once you understand it and you're advanced, the dead cat bounce is a really, really nice strategy. Basically, the principle behind it is you can drop anything off of a building, including a dead cat, and it will bounce at least a little bit. And that's kind of what we've seen happen this week with the market. And then obviously it's been supported by news. I know today we're doing end of day Friday options trading, and I think I did 20% just trading calls when they released the $2 billion or the $2 trillion aid bill, which was pretty awesome. Been waiting all day for that. It finally came out, and then it's started making money, and I think that'll probably finish up because if you look at what the government's done, it's basically been they threw almost everything they have at the economy. They threw 0% interest rates. They threw no student loan payments. They threw double unemployment percentages, payouts. They threw 0% reserve ratios, which means if you give $100 to the bank, they're legally required to hold $0 to fulfill your withdrawal request. It's absolutely crazy. The overnight lending rate is 0. The federal funds rate is 0. I mean, they've literally thrown absolutely everything, and the recession hasn't even started yet. It's the first month, and they never, ever last less than 4 months. It just doesn't happen. And the coronavirus cases are just skyrocketing. I think U.S. just passed China as the world's leader. So I'm sure we're going to be looking back at this in a long time and just, see that this was a pretty big crash. And obviously it's going to be, and I got some big bets that it's going to be. Update on, I think, a couple weeks ago, I know we're on our path to 40K on the KEM position right now. It's at about 10, and then I cashed out 2. So I cashed out the March 20s, which expired, I guess, last week. I got in those at 57, and I just sold them at about 2,000, just a little bit less than 2,000. So that was it was pretty nice, 3,200%. And the rest of the position, I'm thinking will be worth about $8 a share or $8 a contract instead of 3.3. But also the VIX, I'm shorting the VIX because volatility peaked and then it went down. I just closed that, and I'm thinking the volatility is going to go back up because essentially what's happening is we're at the end of the dead cat bounce. So you throw a dead cat off a building, throw anything off a building, it's going to bounce a little bit. And so what you do if you're really, really good, you got to be really good at timing it, is you buy right when it hits the ground, and you sell as it reaches the peak of the dead cat bounce, as it reaches sort of the peak of whatever the bounce is, because it's not a real there's a lot of people right now, especially my dad included. It's kind of funny because he just made I've been telling him for a month ago, I've been telling him for 2 weeks to short Apple because I don't know, the Apple position I was talking about the other week, it went up by I think 800%, and I realized those gains. It was pretty nice. Put in about 5 on that, 500 turned into about $4,000, turned into $6,000 at one point. Now it's at 2, but I closed it out at I think $4,500. And I rolled those over into Amazon 1000 October puts, which is pretty ballsy. It's only one contract though for about 2,000. So I'm excited to kind of see how this works out. But anyway, so my dad, if you guys don't know, he's got some Series 7 or securities licenses so that he can sell bonds. He sells bonds, tax-exempt bonds for a living. And so he has to hold all of his positions for 30 days, which is just, it sucks. It really does suck. And so anyway, a while back, I guess it was a month now, I've been telling him every single day to freaking short Apple. And anyway, he finally shorts Apple, makes $50,000-$60,000 on the trade, but he has to wait 3 more days to close out the trade because of the federal legal requirements, which is crazy. crazy. Anyway, they went back up a little bit. He closed it out. I think he closed 40,000 on it. I don't know. But he went from, I think, 290 to 250, which is really good. He didn't have the ability to trade options. If he bought the puts, dude, I mean that's at least 400%, which is pretty nice. And my point is, so I was talking to my dad, and he's like, isn't this the bottom of the market? Are we in a bull run now? And I'm like, dude, no. Like, recessions don't end in 1 week because of legislation. If you look back at 2008, when the Fed bailed out the banks, they put $700 billion in investment capital injections into, I think, the 7 major banks or whatever. And from that point forward, the banks didn't lend out the money. And after the gigantic quote-unquote bailout, the crash still lasted for like 2 years. I mean, it didn't create a reversal. And a lot of times people think that like feds and regulation and the guys on the inside of the government can like save the economy, but that's just total bullshit, because the government doesn't control the hundreds of thousands of millions and millions, the tens of millions, the hundreds of millions of investors that have a stake in the economy. Because what moves a stock price, what moves an index, is not, I mean, news helps, right? But news is just news. The only thing that moves it is people buying and selling. Like, the president can't even own stock, so like, the legislation is just a way to influence the market, but the market is still, going to go to wherever the hell it wants to go. And so that's kind of what we have happening right now. This is why today was Friday. It was the last day I traded calls, I think, for a long time. I sold VIX puts today for, I think, for 80%, which was, I think, $1,000. It's 1,600 or something. And then I sold some calls on like the hacking sector, whatever you want to call cybersecurity. Those I thought were going to move a little bit more. I sold a pretty much like a 5% gain. It was pretty small, not a big deal there. But I'm basically selling all my calls right now. Because I bought the calls in anticipation of the dead cat bounce, and I also bought them because I didn't really want to sell my puts, because with the dead cat bounce, you don't know how high it's going to bounce usually, and at the same time, it's really short-lived, right? So I wouldn't really close out medium-term positions because of a dead cat bounce, because it's short-lived. So I didn't, and so I had the calls sort of to hedge, and they made, I don't know, 30% gross or net or whatever you want to call it. On the whole portfolio, which really helped, because obviously puts are going to go down. Not that much though. I was surprised. Most of the puts went down like 20% this week, whereas the calls doubled, which was pretty impressive. I did get hit on Amazon though. I think it was a really big contract for me. That was a big position, and as of right now, I've done like 55% of it, which isn't great. So we're going to hold those, and we're just going to see how it works out. Unemployment came out recently, and it was, as you guys know, freaking massive. It was the biggest change in unemployment. I think last month or 2 weeks ago, whatever the one before this was, the unemployment report was like 100 and something thousand. And to put this in perspective, I'm pretty sure unemployment in 2008 was like 300,000. Something along those lines. It's something small compared to what just came out, which is apparently 3 million. Which is freaking crazy. I'm thinking we're going to get to about 6 million at the next full-time monthly report, which is going to come at the end of the week, and I think that's going to be the crushing thing. That's really gonna help those puts. And also, hopefully, Amazon will close its warehouses, because like 10 of them are already closed and 11 of them have coronavirus. So that's kind of the play there, which is exciting. So I guess we'll see how it works out. But anyway, a lot of people are saying like, this is gonna be the bottom, this is gonna be the bottom, this is gonna be the bottom, and like, everyone I know that's like actually good at trading is like, no, it's not. It's a dead cat bounce. And so it's really critical that you don't fall for the media, fall for people saying they're like, oh, this is the biggest recovery since October 2008, because at the end of the day, recessions don't end in they just don't end in 2 weeks. It doesn't happen. And so this is one of those examples, especially if you're holding puts like I am, and like basically all my students are. The AMD ones, I know they've tripled, and now they're back to 100% in gains. Is to just have like hands made out of solid diamonds and hold. And you gotta be smart about it. You can't be stupid. Like for me, I really need to be smart about this Amazon position, because it is a pretty chunky size in my portfolio. But a lot of times you have to hold. Today, I was down pretty big on the day trades until everyone had been waiting. The bill was supposed to get passed at like 11 o'clock. Then it got delayed to 1 o'clock. Then they got delayed to noon. And then it got delayed to 1 o'clock. And then it got delayed to 2 o'clock. It came out at like 2:20, I think. Anyway, the moment it came out, everything spiked, and that's when I sold everything. But it took some patience. I mean, that was 5 hours of waiting, and it was a very profitable 5 hours, for sure. But it was like 5 hours, 20% portfolio gain. Which one are you gonna go for? And for me, it was a phenomenal trade, great investment, great stuff. But you still kind of want to recognize that you have to hold stuff sometimes when there's temporary decline. Now, what I don't mean by this is if you're holding an index investment right now, that you should hold it until the market bottoms in like 8 months, because that's stupid. That makes no sense. What I do mean is that if you're shorting the market and the market goes up for a week, you don't just instantly sell out. And that's the big takeaway here. So with that said, thank you guys so much for listening. We got a ton of videos, podcasts. Hope you guys are doing really well. Hopefully trading smart, trading setups. There's a lot of great setups. I know there's a really big monthly M setup on BlackRock right now, and I'm in that. And then there's also a really nice kind of double top on a New York real estate company called SAFE, ticker SAFE. And all they do is hold New York real estate. I don't know if you guys know this, but New York has the most coronavirus. I think they're at 44,000 right now. I'm sure they're going to keep going up. And if the entire state has coronavirus, no one's going to A, go to work, B, pay their rents, and C, try to move into a new home or sell their condo. So anyway, some really great plays out there right now. Hope you guys absolutely crush it. And just I'm thinking the volatility should spike, so all the premiums should go up a bunch. So again, it's just a really solid time. So thank you so much, and I hope you crush it. Yay! All right, I'm gonna go convince my mom to sell her whole portfolio because stocks are about to crash, and we'll see how it goes. I'm excited about it. So thanks, guys. Bye. Want more stock market secrets? If so, go get your free copy of my best-selling book, 9 to Noon. You can get your free copy plus $11,176 of unannounced bonuses it took me years to uncover completely for free at 9tonoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets you can use to double your portfolio every 2 years and make upwards of 10% per trade daily.